Hey guys, welcome to today's session. I just pinged the Discord, so we're going to give people a couple of minutes to join, and then we'll jump straight in. Feels like a long time since I've been on stream, although I think it's just because I've had a few days off for my son's birthday, so I actually haven't missed a session, I don't think. Unless, did we go live last Thursday? I can't remember. I've slept since then. My memory's not great. It's also super dark in here. Like I've had to put that light on in the background, because if I didn't have that, you probably wouldn't see my face. Although that might be better. I also have like white things on my screen. I've got like 4 screens, and I have to keep the top one white so that there's at least some light on this side of my face as well. But outside is like, I don't know if you guys can see. Like outside is just dark. It's just the winter is here now. Halloween's out the way. My son's birthday's out the way. Now the next thing is Christmas. Although I think is it bonfire night tomorrow? Bonfire night. Yeah, November the 5th. So tomorrow night is bonfire night. And that's kind of the last thing to get out of the way. But bonfire night's not really a massive deal in my opinion. I presume they don't celebrate bonfire night elsewhere outside of the UK. Should we have a look? Bonfire night. Do they celebrate bonfire night outside of the UK? Commonwealth countries: New Zealand, Australia, Canada, South Africa. Interesting. I didn't think they would, but hey ho, 'tis what it is. Tal, how we doing? Hi, handsome. I appreciate your kind words. I have got a fresh trim, although it's messy because I haven't had a chance to wash it since I had it cut earlier today. So I apologize if I look a bit like a steak. And I'm also, I don't know what it is today. Like my head seems to be fried. I think it's these Tuesday sessions, because I do them at 5 and not 4. By this time, I'm just like, my brain slows down for the day. Can you not show the leaderboard? Let's have a look. XXVI. Where are we? Ooh, 439th. It's a bit of a sore subject, I suppose, isn't it? Let's have a look. Sensitive subject. I mean, looking at your curve, it's no biggie. How much are you down today? 2.39% today. 2.34% for the month. I mean, you're coming off a good month in October. Mine's the same, really. But then this happened to me at the beginning of October. I think the first week of October was really poor for me, and then by the end of it, I ended, at a high, pretty much similar to your October return. I think it was about 4.5% or something like that. But at the beginning of the month, I was 1% in drawdown. So I'm hoping November writes the same script, as in starts off tough and then claw through the rest of the weeks and end on a high. It's all good. It's normal. Yeah, it's not. It's normal. It is what it is. You'll make it back. I mean, these sort of drop-offs in equity is like absolutely normal. Like if your record was like a martingale's record, then these become a concern. But because it's not, I'm not bothered at all. And then what was the other one? XY, BY, WXBY. There we go. I pressed in my memory there. 66.5. Oh, just hurts on my main account. Won't probs be gold when it can. You've still got a couple of months till that. Like, don't worry about that. Okay, so the drop-off's not as bad on this one. It's about the same percentage, but you didn't have the 4% month last month, which kind of makes sense. XXBI. Yeah, I still think. Let's take a look. 1, 2, 3, 4, 5, 6, 7, 8. When did you start? 2nd of June. Okay, so 1, 2, 3, 4, 5, 6, 7, 8. So you might be going into gold in March. 2nd of June you started. I don't know why it's saying May. You started on the 30th. Okay, so 30th of June would be 1 month. 2, 3, 4, 5, 6, 7, 8. So you'll be going into gold in February, which means you've still got 2 months. Yeah, you've still got 2 months to make it up, which is like what, 2% a month, maybe just under 2% per month, maybe 1.5%. Well, sorry, you've got 3 months, right? You've got the rest of November, December, and January. So I wouldn't be stressing at all. And even then, even if you don't hit the 20% by that point, just keep cracking it because you're almost there. You're breathing on it. What was your all-time high? 120. Okay, so you did hit that. That was a week ago today. So you did hit that the required return. So you'll be back there in no time. Absolutely no time. WXBY. Let's take a look. WXBY. Yeah. So if you started in April, what of April was it? 24th. Okay, so 1, 2, 3, 4, 5, 6, 7, 8. Yeah, and then you'll go in January. How you doing, Rob? Hope you're all good, dude. Yeah, because once you've hit the 8th month, you have to remember, once you've hit the 8th month, that'll be kind of mid-month, and then you won't get promoted to gold until the recalculation at the end of the DARWINIA period, right? So it'll be the following month. It's frustrating because when you've, what was your high on here? 117. So, okay, so it was just XXBI, but it's the same with XAQP. Like you've hit the figure, and then it's like, okay, now it's just a waiting game. I think according to my testing and my reports and all the data that I have on XAQP, I shouldn't go into big enough drawdown. Like, I think I'm clear enough now. How you doing, Jason? Hope you're all good, brother. I think I'm clear enough now that I shouldn't go back under 20% based on historical data of the portfolio. I think my high was was 131 almost. And the max drawdown, I think this should get to, if things get really hairy, is like 9%, maybe 10 at a push. So I don't think we'll get back below the whatchamacallit, the level for gold. The only concern for me is if I went to 20%, for example, that would be, how much percent drawdown would that be? I don't even know, probably 9-10%. And then I would have to make sure that my return was back above 25% because of the risk, because of the return to drawdown calculation that you have to have, or the minimum threshold that you have to have. I mean, I was above 30. I'm not almost back at 30. I was above 30 and I've dropped below it. So, but it's cool. I know that I have days like this. Like this morning, bring over MetaTrader. So this morning, I woke up. Today's been super active for me. And when I woke up, I think I had these 4 trades had closed. Had this one closed as well? Yeah, this one might have closed. Yeah, so I'd had like 4 or 5 trades by the time I'd woken up, and 3 of them were had hit stop, and it was on dollar yen. So if we look at dollar yen, I just got caught up in that absolute chop. Which one is it? I got caught up in this chop. So I got long 2 orders, then a 3rd order, and then it just absolutely steamrolled me to the downside. I got short, and then I actually closed my shorts earlier today. You can see here and here. No, sorry, I closed them here. Because I also took a stop on the DAX as well. So I closed my GU shorts and my dollar yen shorts just to kind of hedge the losses for the day as much as I could do. Obviously, GUs continue to fall, but it is what it is. I do employ like an element of manual management, even though all of my strategies are automated. I like to have that kind of oversight that I'm like, okay, well, I don't like my daily loss to exceed a certain threshold mentally. So I will sometimes close winning positions if it's covered the loss or covered a portion of the loss, just so that my losing days aren't as bad as they could be. Because if all of my positions then turned and either went to break even or also became losers for the day, my losing days would be far, far bigger. So yeah. How are we doing, guys? Can see quite a few people are joining now. Hope everyone is good. I also don't really have an agenda for today. I thought I could just come on, answer some questions. I know there was an issue over the weekend, which I was only aware of this morning because obviously I've been off for the past few days. There was an issue over the weekend with the guys who have received their coupons for free boosters. So if you haven't had that sorted, the coupon should be working now. If you're eligible for the free booster, if you haven't had a DarwinIA allocation within your first 6 months of trading at Darwinex 0, then check your emails because you should have been sent a coupon that you can use to get a free 25,000 euro booster. I did ride EU4 for 100 pips. Nice. I mean, I haven't really looked at. I only ever look at like the charts that I'm in these days. Now that everything is done like algorithmically, I just don't. I try and stay as agnostic as possible on the charts and price action, just because I don't. So half the time I look at something, I'm like, yeah, this trade's never going to work, and you know, my strategy's execute, and I just have to let it do its thing. I mean, this kind of stair step is like really nice, right? Just stair stepping down constantly, bang, 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 bang. It's a really nice price action. Unfortunately, I don't trade price action anymore. So it is what it is. But guys, if you want me to take a look at a specific Darwin, let me know, and I'm happy to load it up. Or we can go over some strategy stuff. Happy to do whatever you guys want me to do for today. Like I say, I've been away for a few days, so I'm coming back. I'm not quite in the flow today. I feel a bit weird. I've been struggling with my chest again recently. Take a look at XAQP. Why it's not gold yet. Well, no, why it's not gold yet. We can actually look at XAQB. It's been a long time since I've done a breakdown on XAQB, so it might be worthwhile. Rob said he loves the colors. I'm presuming you mean my chart colors. I try and keep them all neutral, just because when I see, like, mentally, especially now that I'm not physically executing and it's all done via you know, my algorithms, the last thing that I want is to be seeing different colors flashing on my screen, because you guys can't tell, but I've got like 4 screens set up here. So my top right hand screen always has a chart on. It always has my portfolio on, just so that if something goes wrong, if one of my algorithms sizes incorrectly on a trade, or not that it's likely to happen, but just if something went wrong with one of them, I can cut the trades straight away, and I can kind of do some damage control. So I always have my charts open. But seeing the red and the green flicker, and you know, obviously when you have exposure as well, when you're in the market on something, it's very easy to get sucked into watching the candles, where I find when they're just black and white and all the candles are the same, it helps me be agnostic on the chart, because I'm just like, I don't really care. It is what it is. And one of the things that I've found, like beforehand, I was always like, okay, engulfing candles, like big candles, it kind of makes you feel more confident. If like, let's say you're short and there's a big bearish engulfing, you'd look at it and you'd be like, oh great, that's exactly what we want. And then now, since I've had the candles black, I've realized how many of those just fail. Like there'll be a massive bearish engulfing, and then the next candle will just like shoot back up. But because I'm not watching the color of the candles, I notice it more, if that makes sense. Because I don't notice it's like a bearish engulfing until after the fact. Anyway, that's me kind of getting off track. Helps the eyes, and you can't see red and green. Yeah, I mean, red, what's the emotion it's supposed to invoke? I mean, it's gonna sound really bad. I don't subscribe to a lot of psychological problems that people have when it comes to trading. I think there's, of course, psychological issues that you have and that can run into, and I'm not disputing that. But I think there's a lot of people blame psychology for a lot of things, right? That they'll just say, oh yeah, it's my psychology's poor, this, that, the other. But I know for a fact, red, like the color red, instigates something in your brain. I can't remember the emotion it is. It's like a defense mechanism, right? So your brain goes into like attack mode when it sees the color red. Obviously, green is quite calming, But just seeing this display of colors, it's like designed to, I don't know, I guess spark gambling, kind of keep you on the edge of your seats, right? Kieran, explain to me why there is no app yet or the site is optimized for tablet, mobile. Not everything works as good as PC. I completely agree with you, dude. I don't really know why we don't have. I know we used to have an investor app. I don't know why there hasn't been one created for Darwinex Zero. I'll push back on the team and see if we can get something like that created. Because yeah, Darwinex Zero on mobile, or at least the dashboard on the mobile, is pretty poor. You can't even see your equity curve. And I also don't think you can request the desktop site, because I know on some websites you can request desktop site, and it goes all out of whack, but at least you can see what you would see if you was on the desktop. Tails coming with the heat today. Explain to me why there's no XAQP tribe yet. There will be. I promise you, at some point there will be an XAQP tribe, and I will be the tribe leader. Maybe when I get to gold, maybe we can celebrate by, building that tribe. VJ, how we doing? Please review ENAC. I have made more this year in the Signal account than last year, but my Darwin is less this year. My risk per trade has been steady or lower than last year. Let's take a look. Before 2026, I mean, I'm not going to hit gold until Jan 2026, so maybe that's when we'll look at revisiting that discussion. Okay, so made more this year in the Signal account than you did last year, but your Darwin is less this year. Okay, so let's take a look at your value at risk. This is nice, dude. This is consistent as anything. All NASDAQ, very, very, very consistent on your maximum adverse excursion, or your adverse excursion in general. You've got a couple of trades that are like slightly larger, but as far as like consistency goes, pretty much around the same level each time. And also to the upside as well, your favorable excursion is pretty much like you don't have any major outliers. What I always say with this, and I apologize for the guys who come to these sessions frequently, you're probably bored of hearing the same things, but I think it's important. When it comes to your excursions, if you have like one or two candles like up there and the rest are all down here, to me, of course, I mean, there's always the argument that you make the most of your money on a couple of trading days. I get that. But if it wasn't for these, if you wasn't at your desk and you didn't execute on that day, or I don't know, you was hospitalized that day, let's say, for example, and you miss those two big wins, like your whole curve would look completely different, which is why I don't necessarily like relying on like one or two outliers to make up the majority of your return. Like this is very consistent. You've got a few above like the average level, which I would say your average is actually down here, but I would say your average of like the trades that you run is all fairly consistent, which is fantastic. There's a guy who has a brilliant one of these. TVTA. This is Collins. So you can see like you can tell that this dude, whether he has a fixed stop and fixed target, like pips wise, percentage wise, or what have you, I don't know. But you can tell like he does the same thing time and time again. The only thing that I've noticed now, and I might reach out to him about it, I have a good relationship with him, is that if we take a look at this period, and this is one of the things that I look for, right, when I'm looking for consistency and kind of mental frame of the trader, I guess, is that this period is completely different to here. Now, if we go back to his equity curve, look at what period's also different. I mean, we'd need to move it over slightly, but from here there to there, which pretty much is the same distance, he's been in drawdown. Now, does that show us that whilst he's in drawdown, he's now changing things? I don't know. Maybe that's why I want to reach out to him, because all of a sudden we've had, how long is this? Like a year? Is that scale up moment? That's not him scaling up. So this is just this is his. I mean, sorry if I'm getting the wrong end of the sticks, Tan. But this is his excursions. So this is showing how far he's running trades and how far trades are running against him. So the max they ever went against him was one of his first trades, and then it never went past that point. So that was his max adverse excursion for the whole record. And then all of a sudden he's at 1, 2, 3, 4, 5, 6, 7, pretty much go past that point. Is it concerning? Probably not. Maybe he's making some adjustments. Maybe he's getting chopped up in price action, because I think he also trades EU primarily. Maybe he's getting chopped up in price action and he's decided to expand his stops and targets, which is completely fair. But what I don't like with this is when a trader changes their behavior based on their P&L curve or their equity curve, because sometimes that can highlight issues. Like psychological issues that the traders have at any given time. But anyway, back to my point, it's super solid, super steady. And yours kind of reminds me of Collins, which is TVTA, what we've just looked at. I mean, you have a couple of outliers like this, and this. They're slightly larger than the average, but nothing to be concerned about at all. And also, yeah, you have, a few outliers to the upside, but absolutely nothing to be concerned about at all. This is like what it should look like. It doesn't look like you have a very high win rate. For every like one green candle, there's probably like 3 red, but that's fine. Yeah, so 29% win rate. So just under 30% win rate, but you have a payoff ratio or average risk to reward of 3.11. Win rate to, this is something I bring up quite a lot. Win rate to risk to reward. Oh, for God's sake. So I bring up this quite a lot. No, this one. So you have a 30% win rate, which means you have to have a 3-to-1 risk to reward minimum to be profitable. If you had less than a 3-to-1 risk to reward, then you would basically not be making any money. Because you have a low win rate, you're basically reliant on the maths to do the heavy lifting. And vice versa, if you're trading with a 1-to-1, for example, or negative risk to reward, you're then leaning on the win rate and you're leaning on your strategy doing the heavy lifting by, actually picking out good quality trades. Okay, those were due to slippage. I mean, again, there's nothing to be concerned about at all. Like, I don't think it's that bad. I mean, this one isn't slippage, I don't think, because it closed further up. That one, you probably bang on the money because the black line is at the bottom. So for anybody who hasn't used this chart before, there's a little black line across the candles. When you've got thousands of trades, it's really difficult to see. But when there's this many trades, you can still see them. So you can see the little black line there on the green candle. That shows you where you actually close the position relative to the adverse and the favorable excursion on that position. It only tracks it when you're in the trade, though, which is frustrating because, I mean, it's frustrating, but obviously the tech doesn't know when you would have closed the trade thereafter. You actually did. So it's kind of like it can only track your excursions whilst you're in the position. The problem with that is you don't know, is your maximum favorable excursion actually up here? Would all of these candles been like this? Yeah. And you don't know if you're leaving money on the table. So I always say you have to track this statistic manually as well. You have to go back and measure, okay, if I'd have held till the end of the day or the next swing high, swing low, or done X, Y, and Z, what would my favorable excursion be? Am I leaving money on the table? Is there a way to eliminate that that's repeatable and that I can do trade after trade after trade? Okay, anyway, value at risk, pretty stable the whole time. I mean, you started at 6, you're now at 4.9. So your exposure is pretty standard across the board. Like, you haven't had much of a change. I guess you're now looking probably 20% or 30% sizing of what you was initially. It also doesn't look like you grid or martingale, so I'm not 100% sure why there's been a change. Maybe due to the increase in volatility on the NASDAQ this year, maybe your risk multiplier is lower. Or your target risk is lower, and therefore it's I don't know, multiplying at a lower size. I don't have the answers without seeing the trades, unfortunately, but I'm not sure. It could be something to do with because it would copy at that size. I don't know, unless you average into trades. If you average into trades, that can sometimes affect it if your deleverage is exceeding a certain threshold. But at 4.9% value at risk, I don't think it would. I noticed that the risk engine has been closing part of my position. I don't know why. I think that's the main reason my Darwin is down in comparison to my signal. I risk less than 1% per trade. Yeah, so if it's been closing some of your exposure, which it can do, what is it? ENAQ. So basically, it measures your deleverage for a certain period of time, and it will close the position if you exceed that threshold within that specific time. So if we take a look, oh, you got 400K in investor capital, nice, banging. So it's a brilliant Darwin, to be fair. Risk adjustment. Okay, yeah. So you can see it has been closing some of your exposure. Deleverage. Yeah, I wonder why that is. Your deleverage seems fairly high for your value at risk level. So if we go risk adjustment, Darwinex. Actually, no, I think it's on. I might say it on this K-base article as well. Might be worth having a read of this, because it'll tell you why the risk engine is getting involved. Does it tell us? Okay, deleverage is a proprietary tool we use at Darwinex. In fact, let's do what we did before, because that was a fun exercise. Let's get ChatGPT up. Okay, so we go. Explain this to me like I'm 5 years old. Use examples. I don't know how it's going to turn out, but we did it for what was it? We did it for last week. Was it capacity? I think we did it for capacity. Yeah, we'll see what he says. Yeah, Rob, we'll take a look at your risk. I'm presuming it's just because you increased your output, which is what you said to me privately last week. But we'll take a look. Hey Kieran, how are you doing today? Congrats on the new all-time highs. Appreciate that, dude. I'm all good today. I'm feeling a little bit lost coming back after a few days off, so it's always hard to get back into things. And yeah, hit new all-time highs and then collapsed. But appreciate the kind words, dude. Okay, so we explain this to a 5-year-old using toys. So what's the game? You have a trading strategy. Let's call it Kieran the Trader. Banging. What a name. Darwinex takes your strategy, turns it into a Darwin, which is like a video game character that investors can safely play with. Now, in this game, Darwinex wants every character or every Darwin to fight with the same level of power. Not too dangerous, not too weak, always with a safe risk level, 6.5% value at risk. Step 2, the risk engine is like a referee. Think of Darwinex's risk engine as a referee who watches every move your character makes. If your character starts fighting too wildly, the referee steps in and says, whoa there, that's too risky. Let's calm that down. This is called intervention. If your character fights calmly and fairly, the referee doesn't have to step in. This means no intervention. What the risk adjustment score tells us, it shows us how often and how much the referee has to step in. I mean, we already know all this. I want to get into the boom. No, it hasn't broken down the one thing that I wanted it to break down. This is a good analogy, the speed limit analogy of simplified value at risk. Imagine you're driving a car. Darwinex says all Darwins must drive at the maximum speed of 65 miles per hour. This is like 6.5% value at risk. But some traders drive at 30 miles per hour, too slow, safe but not exciting. And some traders drive at 120 miles per hour, which is too fast and dangerous. So the risk engine automatically slows fast drivers down to 65 mph and also increases the 30 miles per hour drivers up to 65 miles per hour, so that everyone's driving at the same speed. If you're always driving near 65 miles per hour safely on your own, you have a high risk adjustment score. If you always speed and need slowing down, you have a low risk adjustment score. I still think that doesn't explain what we're trying to. So maybe I'll explain it better than ChatGPT. But basically, it's going to look at. Let's get the other one up. It looks at your deleverage within certain periods. Okay. And if your deleverage exceeds a certain level within a certain period, then it starts to intervene. Also explain this like I'm 5 short and sweet. I don't mean like I'm 5 short and sweet. Keep it short and sweet. I want to know how and why Darwinex risk engine will cut risk exposure based on the leverage. Let's try that. Give it a bit of a guide. Okay, we already know that. We already know this. We already know this. Okay, here we go. Extra safety rules. So we're using the car example again. Even if everything looks okay, there's a hard cap. Fast trades, so under 15 minutes, can't go above 16.25 D leverage. Medium trades, 30 to 60 minutes, can't go above 13 D leverage. I don't know why it's added an X there. That X shouldn't be there. And long trades have a max D leverage of 9.75. If the trader tries to go faster, the risk engine hits the brakes. I mean, that is such a letdown. I was hoping it come back to us with a better explanation than that. But your D leverage has been over those figures anyway. So basically, if you're holding the trades for longer than 60 minutes or a day, however long the D period is for that specific D leverage, then it will start to shave off some of the position. This is why I always recommend traders to do what I do, and that's risk a super small amount on their Signal account, because the chance that they'll then be having the risk engine adjustment is far, far lower, because your deleverage is going to be lower at Signal account anyway. So you're going to give you a little bit more breathing room, because my deleverage might be 3. Okay, so for me to exceed the maximum deleverage of 9 after like a day or what have you, I can't remember the exact number. I'm rarely ever, if ever, going to get to that point. It's like I'm never going to have that risk adjustment. I mean, I probably have done at some point when the asset volatility picks up. I mean, you score 6.6 out of 10. Mine's 10 out of 10. I actually don't. Yeah, 0 positions adjusted. So I've never had the risk engine adjust any of my positions, because my deleverage is always so low. Like if we look, deleverage it's all under 1. There's a couple of trades here over 1. Yeah, there's a few trades over 1, but for the most part, it's all under 1. So I never get anywhere near those thresholds of like, I can't remember what ChatGPT said, like 14, 10, what have you, which is why I prefer my Signal account to be risking small, so that the risk engine doesn't get involved. Whereas if you have somebody who risks high, can't LW. Oh, is it LWLU? Yeah, LWLU. Let's see what hers is. LWLU. Oh, what a recovery. So risk adjustment. Okay, so you see her deleverage goes as high as like mid-50s, right? So if she's not cutting her positions within an hour or a few hours, the risk engine is going to start getting involved and closing a portion of her trades, because she's holding a trade outside of the deleverage threshold. So instead of risking 1% per trade, should I hold the size instead, even if the account grows? No, I would scale the size with the account. So do that as normal. Oh God, Tan. I'll come back to that in a sec. Yeah, as your account grows, of course, like make sure you're risking 1% of the new equity or the new balance. Otherwise, your value at risk is just going to come down over time. Your risk multiplier is going to go up. It just means that your record from the MetaTrader perspective is going to look a little bit weird. Your Darwin will always be fine though, because that will update over time, and because it takes a 45-day and the 6-month average of your sizing anyway. So there's no real right or wrong answer to that. It's just however you find it easiest to do. I think my adjustments could be due to the fact that I trade NASDAQ only. It can be volatile by nature. Yeah, of course. Asset volatility is one of the 4 things that calculate your value at risk. And also because your VAR is quite small, where was it? Because your VAR is quite low, like 4.9. It sounds like it's like this. You went from 7 in September down to 4.9. It doesn't sound like a lot, but that's like a 20% reduction, 25% reduction. That is a big change in such a small space of time. So yeah, there might be some it might take a while for the risk multiplier to catch up properly anyway. So just bear that in mind. Like, because I was explaining to somebody before and they were saying, yeah, but my value at risk has only gone from 5% to 10%. I was like, but that's a 100% increase. It's not a 5% increase. It's a 100% increase from the risk level you was at to the risk level you're at now. So you basically doubled your size or doubled your trade frequency, what have you. Like there's something that you've done because you've had a 100% increase in your exposure, not just a 5. Tan, I think I've got you bookmarked. So don't so much. Your gold. Is this the Darwin that you're on about, Tan? JXRC? Is this the Darwin? Is the lower the VAR, the better? There's no good or bad. There's no better or worse. I just prefer having a lower value at risk and letting the risk engine scale me up because it will do it safer than I will. And like I said earlier, if you was here at the start of the session, I said I got 4 screens and my top screen always has my portfolio open on it. So I see the numbers constantly for like 10, 11 hours a day. So I find it easier to watch small numbers, $30, $50, $100, maybe $150, than I do $300, $500, $1,000, $1,500. Because it's especially with zero, it's virtual money. Like, but then even then, when you see the thousands, you're kind of like, oh god, there's a lot of money, you know, to have lost in 10 seconds. So I just find it easier to run my portfolio at low risk and let the Darwinex risk engine scale it up. But then you also run into less issues with risk adjustment and stuff like that. What's your confession then, Tan? Hit me with it. Hit me with your confession. VJ, thank you for reviewing and for the feedback. It's an absolute pleasure, dude. I mean, we could do some more analysis on it, but to be completely honest, like, I mean, you're already smashing it. You got 400K in investor capital. You got a 2-year record. Like, there's no advice that I can give you. Like, you're already killing it. I was diagnosed with depression in March. I'm sorry to hear that, dude. Sorry to hear that. Due to other factors outside of trading, then my trading went downhill. Yeah, mate. Honestly, like if you're trying to trade, but you're not life's falling apart. If you're experiencing problems outside of trading, it will 100% affect your performance, especially if you're a discretionary trader. Like if you have things going on with your family, with your mental health, with your finances are a big one. If you've got issues with your finances, you will never trade to your full potential because you constantly like you're trading with numbers, right? Your job is basically to manage a P&L. But if you know that bills are due and you haven't got money to pay them, the P&L becomes way more like, I don't know, way more of like, a mental battering day in, day out, especially when you start trading with funding companies and things like that, and you're seeing larger numbers like 25K, 50K, 100K, 500K, million, as opposed to trading a $500 personal account. The P&L then becomes very emotional because if you're trading a funding challenge, let's say, and you're up $2,000 on a trade, you're going, well, that $2,000 would pay all my bills for this month and next month. That's what I need. And that's what keeps the carrot dangling in front of your head. Trading with debt and mental health problems is extremely stressful. Yeah, I couldn't agree more with you, Rob. I mean, yeah, having debt and mental health issues is like, I mean, I don't want to kind of bring the tone down, but it's a super serious topic. And I think trading only exacerbates both of those issues. It won't help with debt or like financial problems. It will only exacerbate them. And you can lose an extortionate amount of money in the markets if you're not careful. And then mental health problems. Yeah, trading is one of the most brutal endeavors that you can go through, and doing that whilst you're struggling with mental health issues is just, that's a recipe for disaster. So I always recommend to people, if you're ever going through issues, work on that before you come to trading. Like, work on, make sure you've got stable income to pay debts, and make sure that your finances are okay before you begin trading, because you'll find it 10 times easier. It's like having a cheat code. If you and this is why so many people sell courses, mentorships, all that sort of stuff. If you have extra income, which I'm okay with, just FYI, if you have a job, or you sell a course, or you have mentorship, or you're an affiliate, what have you, for firms, then you're taking in money each month. So you're calmer about the money that you make from trading. If you're 100% focused on trading, and believe me, I did it for 3 years. I was investing in DeFi projects in crypto. I was making a good amount of money from that, but I was also trading full time, and I did that for 3 years, and it was the worst 3 years of my life from a mental standpoint. It was just like every day it was kind of like you're starting from scratch, and I just didn't like it. I have to stay busy outside of trading. And then I can't really speak on the mental health stuff, because I wouldn't pretend to be an expert in how somebody else feels, especially when I haven't experienced much of it myself. But I just know that trading is not the right place to be if you're suffering with mental health problems. It's always better to take a step back, focus on the issues that you're experiencing, and then come back to the markets when you're ready, because the markets will always be here. Like, they're never going to vanish. They're never going to not be here. Well, maybe one day they might not be. But for the foreseeable future, there's always going to be an opportunity tomorrow, next week, the week after, the month after, next year. So it's always best to take a step back and just not do any damage short term or long term, and come back when times are better. Tan said mindset and setup were quite a mess, but now picking back up. I'm glad to hear that. I mean, if there's anything that I can do to help, like, just let me know, even if it's just jumping on a call and for a bit of accountability, and seeing what we can do to get you back up the ranks, and seeing if we can get your performance back on track. But the best thing to do is to just stick around like-minded people. Make sure that you've got your issues outside of trading sorted, or at least on the right track. And then make sure you're sticking around good people within trading. That's why I love the Darwinex Discord server, because there's some fantastic people in there, like Rob, for example. I know Rob quite well. We've met through the Darwinex Discord server. It's always good to be surrounded by people who have been through similar things, and will always have your back through anything. Yeah, I've been through all of it. It's part of it. Exactly. Yeah. Everybody goes through everybody has their own battles, right? But at least, if somebody you can talk to has experienced their own trauma, their own battles, and can help you through yours, like, it's a great thing to have. Rob said, same, man, I'm struggling big time. Listen, dude, again, I don't want this to seem like we're bringing the tone down, but like, I'm always here. Like, if anybody ever needs a chat, like, I'm literally a Discord message away. As I said, I work 10-11 hour days. I just sit here all day waiting for my kids to come back home from school and nursery, so I'm always happy to jump on a call and go over anything. I can't promise I can help with the mental health stuff. Like, I'm no expert in that arena, and I don't like people who pretend to be, but what I am an expert in is helping you get back on the right track with trading, and knowing the things to focus on, and the ways to move forward. So if there's ever anything that you guys need, please just let me know, because I'm literally just a Discord or a phone call away. As Rob knows, we've had many chats. And Rob, I still want to meet you and take you out for a beer or a coffee, or for some food, because Rob lives literally down the road from me. So I think it's about 20-30 minutes. So maybe we can go for some lunch soon. That'd be cool. But yeah, I can hear the rain outside. It's miserable as sin tonight. Okay, let's take a look at the rankings. So we've got number 1 is Queso. It's the first time I've ever ever heard or looked at this, Darwin. Been around since April this year. This looks very similar to XAQP. Very, very similar. Started at the same time, pretty much identical returns. But this looks good. Number one. So quick, where's the DarwinIA stuff? 3.65% return this month. Previous 5 months return 16%, and a max drawdown 3.42. That's impressive. 3.42% drawdown. What do they trade? Indices, FX, and a few stocks and ETFs. It's something about the struggle. You know, it's not fancy, but it builds so much character and the things you otherwise won't get. Yeah, honestly, that's if you see trading as a long-term game, right? Everything that comes and everything that's a struggle, you know that like down the line, you're gonna learn from that. I've often spoke on these webinars about when I lost multiple six figures in a short space of time to a few crypto scams, and how I pretty much lost everything that I'd ever made and more. And, you know, I had to have a reset from zero, which was a really tough time. That period of my life taught me way more about anything else, or sorry, way more about risk than anything else I'd done. There's no mentorship, there's no course, there's no chats I've had with, you know, professional traders or my mentors or whoever it was that taught me about risk. I knew about risk. I knew what risk was. I knew what my exposure was. I knew what investing risks were, all of this sort of stuff. But until I lost everything, I didn't really truly understand risk. Now, at the time, it was like heartbreaking, right? I'd made a load of money in a couple of years, and we're talking like multiple six figures. That's from trading and crypto. And I never mind telling this story because it ends bad, right? Like it ends in the fact that I lost all of that money. So I never feel like it's bragging, right? And it was like years ago. So I made all this money, and then in a short space of time, we're literally talking 2-3 weeks, I lost the whole part of capital. And like I say, at the time, it was like, oh my God, how am I ever going to recover from this? Like, what on earth have I done? I was constantly asking myself if I was stupid on a daily basis. Like, you knew this could happen. Why did you risk everything? Why did you do this? And the honest answer is, I don't know. I guess I got complacent, greedy. I was young. You know, I was arrogant, I guess. Whereas now, today, I respect risk more than I ever could have. Even if I'd have gone and spoken to any pro trader who'd managed millions and millions and millions in the past, no, not one person on this planet could have taught me the lessons about risk that I learned from, you know, the intrinsic experience that I had of losing everything. Which is why it's like great to me now, because retrospectively, I look back at that period and I'm like, if I didn't go through that, I wouldn't have the career that I have now. I wouldn't be switched on when it comes to risk. And I'm not saying that everybody has to lose everything to get to that point, but it's an experience that designs your character moving forward. And it could just be a big loss. There was a time when I was learning how to trade. Is before I had kids, so we're looking like six years ago, maybe 6.5 years ago. And I was on holiday. I was down in Cornwall, which for the guys outside of the UK is right on the southern border of England. And we were rushing to leave the house or where we were staying, because we were going out for the day. And I was trying to enter a trade. And now I was placing a trade on gold, right? And everyone was like, come on, Key, we need to go. So I was like, all right, just give me 2 seconds. So I worked out my lot size, did everything that I needed to, even though I didn't really have a strategy, didn't know what I was doing. And I placed the order on gold. This was on a personal account because it was before like FTMO blew up and before people really knew about funding companies. So I had about 5 grand in a broker account. And I left the house. And as soon as I left the house, I had zero signal. I had no signal, so I couldn't check on the position until I got back. When I got back, the first thing I did was check the account. And I'd lost just over 10% of the account, which now looking back again, it wasn't a big deal. It's like $500, $600. But at the time, bearing in mind, I was learning. So I was still new. I was still vulnerable to these things. I was like, oh my God, I missized. And what I'd done is basically I hadn't worked out gold sizing correctly, because it's like a 100th of or a 10th of FX sizing basically. And yeah, I basically risked 10% of my account instead of risking 1%, and just lost 10% plus charges, commissions, what have you. And that was a big experience, and I never did that again. I always double check my lot size, and then I moved over to C Trader so that I didn't have to double check my lot size. But I turned that experience into, I just saw it as like a £500 lesson. I was like, okay, it stings, it hurts now. It doesn't feel great to have lost 10% in a single trade and not even known that it had happened until I got home. However, I never did it again. I never lost 10% on another trade again. And it was lucky that I did it on an account that was $5,000 instead of an account that was 50 or 100 or, a million, let's say. So you just got to turn all these things into little lessons. Rob said, love you, man. I love you too, dude. I'd love that. I'd love to go for a coffee. Do you have a laptop? Bring it. Yeah. I've got a laptop. We'll sort something for sometime in November or maybe December. I'll drive down, or I might even catch a train down. We can go out for something to eat or a coffee or something. Tan said most of my personal things are sorted. Good. Happy to hear that. Health is better too with medications. Great. Happy to hear that. I feel somewhat reborn in progress. Love that. Love that. It's like now, what do they say? After the storm, there's always a rainbow, something like that. And it's true. You always appreciate the good things and the little things after, kind of a dark period in your life. So I'm happy things are on the right track. And like I say, I'm here if you need anything. Just reach out. I'm only a message away. Yeah, nothing teaches you better than this. Experiences number one. Words teach you the theory. Like, I know in theory how it feels to lose money, but I didn't know how it felt to lose money until I lost everything that I had. And that's when you rebuild and you come back better. There's a common theme amongst, and I'm not putting myself in the position of like a billionaire, right? Of billionaires and successful business owners, where they all say, "Oh yeah, I lost everything once and then made it all back." And I think Robert Kiyosaki talks about it a lot, although he's pretty much full of shit. But there's the notion that until you've lost it all and rebuilt back, you kind of haven't really made it. And I sort of agree. Like, these guys who built multi-billion-dollar companies, they haven't done that out of luck. They've done it because they've learned tough lessons and they've rebuilt back from it. They probably had so many failures in their early years that you don't know about, but that they learned their lesson from. They probably lost everything. They probably slept on the sofa at their parents' house, because they'd moved out, lost their house. You just never know, right? But it's just important that you turn all of those things into lessons. Rob said, even losing 55K can send you into a stupor of emotion. You start hating yourself, but I'm sure it'll get better. Yeah, any amount of money, right? It's all relative. It's all relative. It can be £500. It can be 50 grand. It can be 500 million. It's all relative to how much money you have and what you can emotionally control. Because again, some people might lose everything and be relatively unbothered. Some people might lose, 5% of their net worth and have a complete breakdown. It's all relative to the person and all relative to the value. I've been trading since I was 18. I'm 22 now. I was into trading way before 18. It's something that was always there in my life, and I was speaking to me like no other thing. So let me mute myself a sec. There you go. I think my kids have just got home, hence why she's giving it large at the window. So on that note, I'm going to call an end to the session because the kids are home and it's about to get crazy. It's my son's birthday yesterday, so he's on this constant high at the minute because when he walks through the front door, he's got loads of new dinosaur toys, which is great for me because I love playing dinosaurs with him. But it's like as soon as he sees those toys, he goes on a mad one. So I'm going to go down and sort those out, and then we'll be back tomorrow at 4 p.m. UK time, so an hour earlier. So hopefully I'll be a fresher mind tomorrow. And yeah, we'll pick up where we left off today. So thank you guys for all of you for opening up, and everybody who's put a comment in about some of the struggles that you guys have had and stuff. It's been a real eye-opener. And like I say, I'm always here. I'm literally a message away. And Rob, we will sort something. I will come down to you and I will take you out for a coffee. So guys, have a fantastic rest of your morning, afternoon, or evening, wherever you are in the world. Have a great rest of your day, and I will catch you in the next one. Peace out, guys. Wish you all the best.